In this week's episode of the Stockscores Market Minutes, little day trading for beginners session, we'll talk about when to buy. Plus, I will do my regular weekly market analysis. We will look at the day trade of the week on RMBL and a market scan in search of opportunities that can make you money. All that coming right up. All right, day trading for beginners, when to buy. Hot stocks leave clues. Stocks that make big gains do so because they attract a crowd, and that stock can make very strong moves when the crowd all chases after it. The basic clue for that is abnormal price and volume activity. When stocks start to trade with much more volume, with price moves that really stand out, that show that the market has been surprised by something, well, that is a recipe for a hot, successful trade. Now, one of the things that I like to look for is abnormal price and abnormal volume from a predictive chart pattern. If a stock has potential, it will trade this way, and it's, of course, easy to see with hindsight, but what really matters is if you can catch it early. And so that's why I've created the Stockscores Action Candle Indicator, which helps me find it before the rest of the market. Now let's take a look at an example here. This is a chart of SALM, and it has my action candle indicator triggering right there. And the reason it triggered is you can see the volume is increasing from the previous day, and the price action here was pretty boring and normal, and then the stock came alive here. And that was the clue. Now, if I had been looking at that stock at that moment, it would be pretty easy to see. But because there are thousands of stocks trading in the North American markets, we need a tool to find these in a timely way. And that's where the action candle comes in. I'm running an algorithm on the entire US stock market looking for those stocks that show this exact signal. And when all of those things line up, we do a buy. We know that it maybe has a 70% chance of working, a 30% chance of not working. In this case, SALM really did work quite nicely, moving up through the day. The original buy signal was at $1.13. It finished the day at $1.88. I don't know anything about this company. I don't care. All I know is that the crowd started buying it aggressively early in the morning on July 17th, and that sent the stock higher. All right, well, let's get into this week's market analysis, starting us off with the U.S. markets. And here is a chart of the S&P 500 30-day, 60-minute. And you can see that we have rising bottoms on the chart. Rising bottoms are a sign of optimism. We also have a line of resistance here. We talked about chart patterns last week, and there is that line of resistance for the S&P ETF. And you can see we've hit that a number of times, right around 322. But with optimism building toward that 322 mark, and with volatility getting quite quiet or narrow trading range that we've had in the last few days, we are likely to make a breakout soon. Now, we haven't done that yet, but if the market can make a strong break up through 322, 323, I think it's likely to go higher. Now, looking at the weekly chart, we can then say, well, how much higher will it go? And currently, the resistance on this longer term time frame is at the all-time highs, which was at the pre-COVID correction price. And that is just under 340. So if we can break through this resistance level, well, that's our next stop. We should be able to get up toward the 340 mark. So watch the market very closely next week. We may get that breakout, and that could be the start of a little summer rally that takes us into those all-time highs. Looking at the Russell 2000, which is our small cap stocks, and for speculative traders, those that like to trade those smaller price stocks, this is a real important chart to watch. And you can see that last week we broke out of this pennant pattern. So the trend into the pennant was up. We built this pennant, which is characterized by decreasing volatility, rising bottoms, falling tops, and then we break from the tip of the pennant. That implies higher prices ahead. We may stall at the all-time, or not the all-time highs, but the recent highs around 155 or so. But ultimately, I think we're destined for those all-time highs because the buyers are again showing that motivation in the past few days. On to the Canadian markets, and here you can see the TSX already made that breakout. So on the S&P 500, we had that resistance level, which we are still under. the Canadian market actually made that breakout already. And so it looks to me like it is going to continue this upward trend that it has been in since the third week of June. Looking at that longer term chart, again, there's resistance that's going to ultimately slow it down. But having broken out of this range, we should start to move higher. And let's see if we can get back to those all-time highs from early in 2020. TSX Venture, of course, continues to be in that strong upward trend. We went a little bit parabolic, so you can see a linear trend line became a parabolic trend line. We had what's called a bursting bubble candle right there where we hit a new high, closed below the open, and that means we're probably going to pull back to that upward trend line. I think it's just a matter of some profit taking coming in. There have been some good gains in those mining names and those stocks perhaps getting some profit taking, which will maybe drag this market down. No reason to be really pessimistic about the micro-cap Canadian stocks, but I do think you want to expect that there will be a little bit of weakness in the near term. On to currencies, and you can see the US dollar is building falling tops. Falling tops are a sign of pessimism. We are moving down towards support, and we're actually starting to tickle down through support, and that may lead to a breakdown and the US dollar declining. So the US dollar has been strong for so long, but it's making what we call a head and shoulders topping pattern here. There's a shoulder, and a head. And when you break down through the neckline, which we haven't done yet, but we could do next week, that may set us up for some moves down to other areas of support. And so I'm a little bit pessimistic on the US dollar. Now, if we move to the Canadian dollar, of course, they're often moving in opposite directions. The Canadian dollar is starting to build some rising bottoms, and I think ultimately is going to get back into this trading range. It will have a little bit of a difficult time getting out of that trading range. So I expect it will move up into here, get stuck, and go sideways for a while. But something to keep an eye on. I do feel short term, the Canadian dollar more likely to go higher than lower. On to commodities. Here is the chart of gold, which has been a real strong performer the last number of months. And it is still in that upward trend. Call this an upward sloping channel. It's maybe getting a little bit more quiet, but until this trend line is broken, you have to remain bullish on gold, although it is up a lot, so be a little bit careful about chasing some of the gold stocks higher. Oil, really no sign of life here. It is just stuck in a narrow sideways trading range. Until it can break out of this range one way or the other, I would basically call it a neutral chart. It's not particularly exciting. It's not helping the oil stocks, but it's not really hurting them anymore either. And finally, the fear chart, you can see fear starting to fall off a little bit. We've got a little bit of falling tops here. If we can break down through this support, like something like that, that would probably coincide with the overall stock market moving higher. And I would expect that if the overall market does break out next week, that we will see the VXX break down and start to grind toward its lows again. So my ratings then, I'm still neutral on US stocks, although my rating short term could switch to bullish with just one good move up through that 322 level. Canadian stocks neutral long term, bullish short term. It has made the short term breakout. Gold continues to be bullish on both time frames, and oil is neutral on both time frames. Stocks are again building optimism, and they're on the edge of a new breakout that, if it happens, should take the market back to its old highs. Gold continues to trend higher while oil is stuck in that narrow sideways trading range. Fear is falling, but fear is still elevated. Don't confuse it. We still have a fair amount of fear in the market, just not as much as we had before. All right, well, let's jump over to the day trade of the week. And this is something I do each week as an example of a stock that we traded in the Stockscores active live service, where my algorithm runs on all US stocks in real time, looking for those stocks, trading abnormal price volume, abnormal price action, and abnormal volume action. And when those two things happen, we often have a stock that can do very well. And RMLB was exactly that. It made a action candle early in the day after gapping up to start the day. Now, I don't like gaps. And so what I always tell my students is when a stock makes a big gap like this, wait for it to build a base, because if they don't build a base, they will often fill the gap. Now you can see the very strong volume that was trading on Friday on RMLB, and it made the action candle there. My suggestion was, let's not jump on it yet. Let's wait for it to build a base. And so it pulled back a little bit and then gave what we call the second signal. That was still quite aggressive because it had gapped up so much and it really hadn't built a strong foundation yet. However, later in the day, it built that foundation where it went trading sideways for a number of hours. And then it made the breakout right there. So we've got a stock trading very abnormal volume. After a gap up, it builds a nice base to give it a foundation. And then you get that breakout that ultimately led to a sharp move higher. Now for $100 of risk, this trade required only 60 shares, which was $1,276 of capital. You can margin this stock because it was in the $20 range, and that meant only using $425 of actual capital to take the trade. Now you can see that in the final hour, the stock sold off quite sharply, and it finished the day at a 2.8 RR, which was a $280 gain for $425 of capital, which was a 65% return. However, it also went up as much as 10 RR, and I would say gave a pretty strong sell signal right there on the break of the upward trend line at about 7. So realistically, this was a $700 profit for $425 of capital, which is an even better return. Well, let's now move to the Stockscores market scan. We're going to jump over to Stockscores.com, and this week we're going to run a scan called the Abnormal Breaks US. And this particular scan looks for stocks trading, you guessed it, abnormal price, abnormal volume. Just as we use that for day trading, we can use that for longer term trading as well. So I'm going through the process here to find stocks that are trading abnormally. And you can see here MEDH did exactly that early in the week. It traded with abnormal price, abnormal volume, and look what happened. It went up a lot. Now, very low price stock. Not everyone wants to trade these penny stocks, myself included, but just to show you how this works. Now, what I'm looking for as I cycle through the charts that the market scan found are stocks that are surprising the market. And you can see it here. Very strong volume, strong price action on a stock that nobody's really cared about for a number of months. And so all of a sudden you've got this pickup in volume, pickup in price action, and that tells us that this particular stock, CHEK, has some decent potential. Now I'm a little bit concerned because it got stuck at resistance from the highs of June. And so I would give this one a 6.5 rating out of 10, which means I think it has a 65% chance of moving higher. Now I can continue along, and here's another example of a stock that surprised the market with abnormal price, abnormal volume, and it started to move up quite significantly. We want to find something fairly fresh, so I'm just going to cycle through a few more here. ONTX, I'm going to show you this on a 1-year chart because it really shows the surprise. Now here again, this stock, nobody cared about it for a long time. It's been in this narrow sideways trading range, but last week it started to trade more volume and started to break out of that range. And so I think this stock has great potential. Probably first get stuck at $1.20, but if the thing really works, it could get back up to the $2.50 range. I'd give this one a 7 out of 10. I do own this stock. I bought it last week, and I also held it for a little while longer. And we can continue along, see if there's anything else worth doing. We'll do one more page of these. We've got a couple decent candidates. ZSAN is not bad. This is what we call a flag pattern, and it's breaking that flag. I'd say not bad because the price action isn't really strong, so I'd give that a 6 out of 10. Now, incidentally, this is something that I can do for you as well. We're going to have a service that I'll announce soon, which will do these market scans for you each day and send out alerts when I see one that I like. So make sure you subscribe to the Stockscores channel and click on that notifications bell so that I can update you when there's something new to talk about. All right, here is the final one that I think we'll look at today, and that is AutoWeb. And you can see the abnormal volume, abnormal price action that occurred late in the week. But what I want to show you, actually, let's just take a look at a 3-year chart of this, because I always like to look at that longer term time frame to make sure that it is got good potential. And there I can draw a downward trend line, which is being broken from a rising bottom with very strong volume. It'll run to some resistance here and some resistance here, so it's not ideal, but I would still rate this a 6.5 out of 10. I really love the strong volume that came into auto last week. All right, well, that has been the Stockscores Market Minutes for July 20th, 2020. Again, make sure you subscribe to the channel, click on the like button, leave a comment, but most importantly, trade well.